Welcome back to the Money and Wealth Show. I'm Sterling Fox, in conversation this week with Michael Levy. Now, Michael, you're talking about interest rates on a theoretical level as they affect global economic realities. Let's bring it back home to Canada and here to British Columbia. How do individuals, I'm hesitant to say protect ourselves, but how do we square up so as to be in the best personal shape to weather this current storm?
There's one word, that's credit. You must have your credit in order. If you are overspending on your credit card, which Canadians are and have been doing, not like in the US, but we have been, and if you're going out and taking on a mortgage today at a low rate, knowing you can make the payments at this rate, but 4 or 5 years from now, if rates have gone up significantly, can you meet the new rates? Or are you going to have a problem where you're going to start to default on your housing payments? So I think credit, both personal, both mortgage, have to really be at the top of your list of what you want to do to get your affairs in order. And I think also you have to look at your job, the industry you're in, and is it a survivable industry? And just as an example, let's say you were laid off and you had to go looking for work. Could you survive 3 or 4 months mortgage payments, credit card payments? Could you survive it without working? And I think that's an answer you've got to ask yourself. So I can do all the economic forecasting that you want me to do, and I can be accurate, but you've got to bring it back home to yourself, and how does it affect you?
Well, then perhaps this is the ideal time, as we've just talked about, historic low interest rate levels, to take advantage of that and get into a consolidation mode again in our personal lives.
Absolutely. And by the way, this housing boom in Canada, they're calling it a housing bubble. I disagree with that. I don't think it's a housing bubble. I think there's real demand because of the lower interest rates that's allowing more people to get into the marketplace, and that's what's driving it. I don't see the speculation we saw in the previous housing bubble that took us into 2007. I see a huge demand out there. So yes, people are taking advantage, but you've got to be careful down the road that it doesn't come back to bite you.
Lots more with our special guest, Michael Levy, after this.
Hi, I'm Larry Ray, President and CEO of Gold Ray Resources, Inc. Gold, we all know about gold. It's going to replace the paper currencies that we are currently spending and the government keeps printing. But our emphasis is in China, where we've developed a very nice gold deposit next to a producing mine called the Dai Gold Mine. Currently, we are in discussions with Chinese miners on how to progress this property into a 1,500 to 2,000 ton a day operation. I believe that those discussions will bear fruit here in the next 2 to 3 months. In the meantime, we're also focusing on a new discovery we have of molybdenum here in British Columbia with our joint venture partner, Molycorp Gold Corp. That deposit is very shallow and very high grade and is wide open in all directions. Again, we're focusing on gold, platinum, palladium, and copper in British Columbia as well. But we expect that our first production, or major production, because we've had some production out of China, will be China. Gold Ray trades on the TSX Venture Exchange, ticker symbol GOR. If you'd like more information on the company, visit us at goldray.com or phone us at 604-531-9639.
It's all about money at the HoweStreet.com Money Expo 2010. They'll be talking money, making money, saving money, and protecting assets. See Garth Turner, Michael Levy, Ross Clark, David Skarica, David Smith, and David Morgan. Plus, visit with industry exhibitors. The HoweStreet.com Money Expo in Nanaimo, February 13th, Victoria, February 14th, Langley, February 27th, and Kelowna, March 13th. To attend free, pre-register now at HoweStreet.com. That's HOWE Street.com. It's all about money.
You're watching the Money and Wealth Show here on Check TV. I'm Sterling Fox in conversation with Michael Levy. And Michael, we were talking about housing costs and the fact that you don't agree that we're in a housing bubble right now. One thing that has been made quite apparent to us in recent weeks is the fact that Vancouver, the Lower Mainland, is now the most expensive place on earth to live. How do you counsel young people trying to get into the housing game for the very first time to play in this inflated, super inflated real estate market?
Let's be realistic. Maybe they can't.
Right.
Maybe they have to move out of the central core of Vancouver. Maybe they have to go to Burnaby, New Westminster. Maybe they have to go out into Surrey. Maybe they have to go out into Abbotsford or Mission. But you have to get into the market. You must make your foray. Now, young couples that are working, partners, whichever way you want to look at them, both having good jobs, now with the low down payment and low interest rates, are even being able to buy in the Vancouver market. It's small, and it's not a house, but it is an entry level. And by the way, when you're in the game, then you can carry on
Sure.
and move up. But you can't if you're not in the game. So my advice is somehow, somewhere, if you can afford it, get into the game.
So that's still a priority. That's still more important, because I'm thinking of Europe and a lot of examples in recent years where young couples have simply taken a look at sky-high accommodation realities and invested in other sectors of the economy and taken a pass on real estate because it was too prohibitively expensive. Are you experiencing that here in BC these days?
Oh, absolutely. But why are you buying? If you're buying to invest, don't. If you're buying for a place to live, do. So investment in the housing market, we're past that. We may have another 8 or 10 years of a point where it would be dangerous to be a big-time investor. The market is going to come back down here in British Columbia. It is going to happen. Either interest rates will drive it, or the cost of housing will price it out of the market. People not putting listings on because they're waiting for higher prices. So my advice is, if you're investing, don't. If you want a place to live, absolutely.
Let's talk about gold, Michael, a subject that you're very familiar with and have spoken a lot about over the years. We had one of your colleagues, Garth Turner, on the program a couple of weeks ago, predicting $2,000 gold and $200 a barrel oil. Do you agree that we're headed in that direction?
Absolutely. Garth and I have been oft times at cross purposes, and that's good, because when you get people who forecast, people talk about the markets at cross purposes, then you're getting both sides,
Sure.
and that gives you the ability and the tools to make an informed decision. But in this case, I absolutely think gold's going to $2,000. I absolutely think oil's going to $200 a barrel. The cost now of oil and just shipping it is becoming prohibitive. It is becoming a depleting resource, and countries that are going to expand economically, particularly Asia, are going to need all the world can supply. So yes, I agree with that. As the price or the value of paper currencies come down, fiat currencies come down, as our will to hold fiat currencies, somebody's promise to pay, as we feel there's risk in fiat or paper currencies, we will go to hard metal. My friend Dennis Gartman said it best. He wants to buy an investment that when you drop it on your foot, it hurts.
So
That's
then
gold.
you would counsel a combination, Michael, of gold stocks in Canadian mining companies, whether they mine here or abroad, and physical gold? Or is it more important to you to actually own the gold and put it somewhere safe?
For investment, stocks, no doubt. I would
Okay.
not invest in physical gold. For the insurance policy to insure your investments, it's like a life insurance policy,
Right.
I would hold nothing but physical. I wouldn't buy ETFs. I don't want something that somebody else is holding for me. I want 5% of my portfolio, 10%. There are gold bugs who say 25%, too much for me. But 10%, 15% of your portfolio should be in hard metal, gold maple leafs, my choice, have been for years. And if, by the way, in 2002, you had bought the S&P and you'd bought gold, you'd be further ahead with the physical gold because it insured your stock market loss that started in 2007.
Our special guest this week on the Money and Wealth Show is Michael Levy, and we'll be back with more in a moment.